All right, what is going on, Discord and YouTube family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is Sunday, July the 13th, 2025, year of our Lord, and we will be breaking down, as per usual, the S&P 500, the Dow Jones, and the NASDAQ, as well as going over the volatility index, some of the news for the week, and major catalysts going on for this week. Last week, the analysis was spot on in regards to what we could expect. I thought we could expect some consolidation due to the lack of catalyst that we had, and we basically did that. We stayed within range basically the entire week. Finished the week with a nice strong doji candle, still in favor of the bulls in my opinion. I do believe that we may get a pullback this week, but I'll be breaking down all of that information in the top-down analysis. So without further ado, let's jump right into the charts. We'll start over here on the S&P 500, and we'll break down the monthly candle. We currently have 18 days left on the S&P 500 candle, and the monthly candle has done nothing but go up, right? Just like every other candle in this sequence, it's just higher highs, higher lows, right? Higher highs, higher lows, higher highs, higher lows. At some point, we will get a pullback, which is what I've been screaming about last week. I think that the pullback comes in this week, and I'm going to give you some reasons why that is. But as far as the monthly candle, I mean, you got to give the nod to the bulls. There's nothing more to see here other than green candles. We go down to the weekly time frame. We did finally break out and get above all-time highs, which is what we were calling for way down here, right, off of this gap. I said, hey, the market's going to be looking to target this liquidity up here. That's exactly what it did, right? Once we target that liquidity, now we've gotten above it. We closed above it. We've accepted price up here. Now I'm looking for a slight retracement, maybe back down here to close this inefficiency, or even further down to close this inefficiency down here, which is about 600 points away. So I don't think we'll do that in 1 week. All right. That being said, I still give the nod to the bulls, but to the bears to start the week, right? This doji candle failing to get slightly above the previous week is a sign that the market may be getting slightly exhausted up here. We consolidated at these highs. We could rally, base, and rally. But with the catalyst we have toward the mid of the week, I would assume that the market would want to come down here and then go back up. So we'll see how it's delivered, but that's my thesis on the weekly time frame, giving the nod to the bulls once again. Going down to the daily time frame, we can see that the consolidation at the highs has been the theme for this entire uptrend. As we continue to rally every single time we go up, right? We could just go back and look at every single time we go up, right? Coming off these lows here, we go up, we get consolidation at the highs, we rally higher. We go up, we get consolidation at the highs, we rally higher. We go up, we get consolidation at the highs, and we rally higher. Chop it up, chop it up. We get to these highs right here, we consolidate at the highs, we go higher. Now we're above all the highs and we're consolidating once again at the highs. So at some point we will pull back, but the theme has been consolidate at the highs, go higher, consolidate at the highs and go higher, right? So in order for you to just understand, just take a moment and look at the daily, look at the weekly, like the amount of people that I see being bears in this market is, in my opinion, it's asinine. Right? Because the market is telling us a story. It's telling us that the direction is up until further notice. So why fight that? If you want to make money, why fight that? Right? There's no reason, right? I'm not saying you can't short the market. I'm saying that you should not be holding shorts for a long period of time. Not in this market. It's just not, it's pointless. It's useless, right? But anyway, we got the consolidation at the highs, right? And you can see that this range is pretty tight at these highs. Hence the reason why I'm looking for some type of manipulation out of this range. About 78 points or 1.23%. That's representative by the VIX being slightly above 16. Anytime we get the VIX slightly above 16 for a long period of time, I only expect little over 1% worth of movement, and that's what we've been getting out of the S&P 500. So before we leave this consolidation, I'm expecting a liquidation of these lows, right? Trapping or inducing the sellers maybe back down to 61.60, 61.75, inducing the sellers and then expanding back up quickly to continue to push the bulls or push the market higher and higher. So when we drop down to this 4 hour, you'll see exactly how I'm viewing this, which is what we're going to go to as of now. So let's go ahead and bring out the top down analysis levels and look and see what's going on, right? So first thing I'm going to do is I'm going to take off this INWOG for now, just because we honestly just don't need it with everything else that I have going on the chart. So I usually just take it off because it's kind of in the way currently of what I'm looking to do. I do know that it's there. So for all of you that look for the INWOGs, yes, it's right here in between the chessboard. Great. All right. So what are we looking for? We have an inefficiency right here on the 1 hour time frame between 63.18 and 63.35. Essentially, what I'm looking for is the market to close this inefficiency before going lower, but it can also go lower, right? And then come back up to target this inefficiency and then target the liquidity. Either way, I'm looking for the market to come down first before going higher, or trade up back into the top of the range to go lower if we're going to turn bearish, right? So my analysis on the week is quite simple. I'm looking for about 2.88% with the understanding that this is a huge catalyst week. The market could very well extremely extend past the normal weekly projection, but in order to do that, it's going to have to be bearish first. The weekly projection currently sits over the last 5 weeks at 2.88%. And if we're going to be bullish, I'm looking for the market to trade down first to the monthly settlement level at 62.5375, go up to 2.8% and target the 64.3425, which is very similar to my projection on the week last week. We could very well miss all of this projection and consolidate even longer, but I doubt it with the current catalyst that we have this week, and I'll go over those here in a second. When we look at the secondary level, we have the dealing range back here on the 4 hour. The 4 hour demand at 62.66 is the second level that I like to see the market hold, pushing back up 2.88% into 64.4675. If we can do that, then that tells me that the bulls are very much in charge. They have no interest in pulling this market back, at least not yet and this week, right? So if my bearish plan is to work out, what I'm looking for is I want to see the market trade up, close this inefficiency inside of this resistance zone. That zone, that resistance zone sits at 63.26 at the middle of the zone. I want to see the market trade down 2.84% into our weekly projection daily demand zone at 61.4775. If you remember, that's the same level off the daily time frame analysis. Okay. If we're going to continue down, maybe we get a gap down and create another INWOG on top of the INWOG that's right here, right? We'll trade down below previous day low, looking for a 2.84% move down to the weekly projection of 60,098 or 6,098 or 6098.50, right? Coming from the previous day low at 62.7675. Now, like I said before, if the market's going to be a bearish to start the week, it's going to make me extremely bullish. Due to the fact that it could potentially be bearish to start the week, what I really want to see is I really want to see us extend this 2.84%, pushing into the monthly fib and potentially into this daily demand zone, maybe pushing about 3.5, 3.92%. And that will be identified by a major push on the volatility index. Again, I'll cover that in a few moments if you stay with the video. That being said, those are my levels for the S&P 500. If that's all you needed, then that's all I have for the S&P 500. Let's move over to the Dow Jones. All right, moving over to the Dow Jones, looking at the monthly candle. Again, not to beat a dead horse, but it's bullish. We got higher highs, we got higher lows. And again, 18 days left in this candle. Doesn't mean that we can't come down first and create a doji later, but it just means as of right now, we're just continuing to move higher. We're grinding higher. We put a double top in right here, but again, this double top doesn't really mean anything if it can't make a new low. All right. So that's the monthly time frame. Let's go down to the weekly. Again, monthly time frame goes the nod to the bulls. The weekly time frame, again, a doji candle is usually a sign that the market is getting a little bit exhausted or preparing for a larger move. Do we know which one it's going to be? No, we really don't know which one it's going to be. However, what we can do is we can follow the current trend. The current trend is telling us, hey, the higher highs, the higher lows, and then we have this inefficiency here, right? I don't know why this music is super loud. StreamYard is really cranking up the music here. But anyway, so there's an inefficiency right here that I want to see the market trade back into 43,000 or 045, right? It could very well run these highs first before it does that. But again, I'm just looking at the market as it should be rallying and going up or down, right? Do we know how it's going to be delivered? No. But historically, when you have the catalyst that we have this week, the market tends to trade down to get a better price on those in preparation for those catalysts, right? And again, stay to the end of the video and I'll break down those catalysts, all right? So going down to the weekly time or the daily time frame, again, we gave the nod to the bulls on the weekly, but on the daily, we can clearly see that finally, right, we made a lower high right here on the daily. The Dow Jones usually tells us the truth, and I love the Dow Jones because it's not as manipulated as the other two. Even though we're in consolidation, this consolidation broke this low here from July 2nd. Once we broke this low and came back up and failed and put in a lower high, that is a sign that the market is now on the sell side of the curve. In order to confirm that, we still need to trade below 44,425. So I'll be watching to see if the market does that. And then if we do that, I'm targeting these lows or this demand zone here at 43,471, which I'll break down further on the 4-hour time frame. Moving over to the 4-hour time frame, let's bring back our top-down analysis and break down our levels as we're looking at price. Now, this is the 4-hour time frame, but I like to view it on the 1 hour just so you can see exactly what I saw as I was putting this together. Okay. First thing I see this inefficiency right here. This is the INWOG as well as an inefficiency that the market will definitely look to target when it comes back up. Now, does that mean that the market is going to target this level right now? Not necessarily, right? It could, but we'll see what happens. But what I'm looking for to be bearish is I want to see the market trade up either into the chessboard high or the weekly fib. Daily fib is good, but I like to see it come up and take this liquidity here and even target this INWOG would be fine. So to the downside, what I'm looking for is a push down of 2.92% from the weekly fib, which is 44,777, looking to target 43,467 or this daily demand zone right here, right? If we gap down further, right, or if we gap straight down and we push back up, I want to see us retest the chessboard low, aka the previous day low at 44,509 and then trade down into the daily demand at 2.94%. 43,204 would be the target, which sits us right at the monthly fib and the weekly fib to the bearish side, right? To be a bull, just the opposite. I'm looking for the market to hold this range. We got a dealing range from this high to about this low, and this was the first higher low in the sequence. So I'm looking for is the market to hold the INWOG and or the demand zone on the 4-hour. If we trade down into the demand zone at 44,367, right at the top of the demand zone, I'm looking for a push of 2.95% into 45,673. If we continue to trade down, then I want to see the market again hold this dealing range right at the INWOG. We can even sweep it and then reclaim it. But I measured from the INWOG and I want to see us rally 2.96%, which would be 45,563, finally getting all above all of this supply and then creating blue sky territory, so to speak, right? So that's my analysis on the Dow Jones. Again, go back and watch it. If you guys have any questions, feel free to drop a line in the comments or join the Discord, which is in the description down below. All right, NASDAQ. Moving over to the NASDAQ, the NQ is leading the charge, right? The reason why we're up here is because we're in an AI bubble, right? Not to say, hey, be scared, because you can make money in bubbles. People made a ton of money in bubbles on the upside, and then they made a ton of money in the bubble to the downside. But make no mistake about it, we're in an AI bubble, right? I explained all of that in my previous video, which you can see at the at the end of the video. There'll be a card right at the front, right? But essentially, what we're in is a bubble, and the bubble is continuing to rally, but it's rallying because of the tech stock. The tech stocks are strong, therefore the NASDAQ is going to be the leader because it is nothing but tech. It is a representation of the tech industries. Therefore, it's going to lead the charge, right? So that being said, the NASDAQ is doing its thing. It's leading the charge. Look at the monthly candle. We come down to the weekly. We barely printed a doji on the weekly time frame, barely, right? The market is refusing to break lows on the weekly time frame on the NASDAQ. This is a very dangerous place to be a bear, and you got to be quick on the trigger, getting in and getting out. I rather just wait and go long. That's just my thesis on the NASDAQ. When we come down, if we can come down, I'm looking for a pullback into about 22,217 through roughly about 21,582 on the weekly time frame. We could also consolidate and go higher That would mean that we would fail to take out 22,592. So essentially above 22,590, you can still be a bull if the market continues to hold these levels, right? That also lines up with this high on the weekly time frame from December 16th, right? And that's exactly what you want to see the market hold. To be a bear, it's hard out there to be a bear, but in order for me to be a bear, the market needs to break below 21,569, come back up and retest, fail, and then start trading lower. And then my target would be this in wall right here. But I repeat, I do not see any signs of that coming as of yet, right? The VIX will be my indicator, and right now it's just not giving me what I want to see, and I'll go over that after I break down the NASDAQ. Looking at the daily time frame, again, we're doing that same thing that we did back here, same thing we did back here, same thing we did at the lows. Consolidation, grind up, break the high. Consolidation, grind up, break the high. Now we're in the consolidation phase, and before we leave the consolidation, we usually get a level of manipulation. We got manipulation here, we got manipulation here, and then we got manipulation here to create the new dealing range, only to trade above it and go higher. So that's what I'm looking for in this week's sequence. I'm looking for manipulation down, right? So that we then can play the expansion back to the upside. So as long as this consolidation holds above 600, which is what I talked about on a weekly, then I'm looking for more upside. But as soon as we start breaking through this, then I know I can trade shorts off this level, targeting this low here if the resistance continues to hold. All right, let's drop down to the 4-hour time frame, and I'll break down my levels on the top down analysis. All right, so let's go here and expand this so we can see it. It doesn't look all cluttered. And we'll go down to the 1 hour so you can see again those levels that I'm looking for on the NASDAQ. On the NASDAQ, that inefficiency that we talked about on the ES and the Dow Jones has already basically been closed at 23,029, and it's already started to descend back to the downside. As long as the market stays below the weekly fib, the INWOG, then I'm looking for more downside, right? So in order to go down, however, I'd still like to see the market trade up into the chessboard high, even into the previous day high, to go lower. That looks like a push down 3.41% into the weekly fib that sits at 22,198.75. So I'll be looking for shorts roughly into the 22,991 range, targeting 22,198 to the downside, taking profits off at 22,403 and this 378 4-hour support level, and then being very cautious into this 4-hour demand zone area here. All right, if we get even more bearish, right, meaning we gap down, we get below the previous day low, and we start targeting this liquidity, then I'm looking for a push from the previous day low down to 22,049, which is 3.43% from the previous day low at 22,831. Like I said before, on the NASDAQ and ES, I expect this week average true range to increase, right? With all of the catalysts, I don't expect us to stay at 3.43%. I expect it to go up about 4%, which tells me with that analysis to be true, if that analysis is to be true, we need to trade down lower. So then we can start targeting 4-hour fair value gap, daily demand zone here, and then go to the 30% of the Fibonacci retracement, which is 21,693. I didn't put that on my charts, but it's something that I do talk to the Discord about regularly. All right, that's to the bearish side. Now to the bullish side, what am I looking for? I want to see the market hold the current dealing range. The dealing range is where the 4-hour demand has been marked. 4-hour demand is marked here. So I want to see the market trade into this 4-hour demand and hold it, right? So that level from 22,685, which is where the inefficiency is, to 3.45%. I'm looking for a push back into 23,468, right? And then or hold the INWOG at 22,749. Now you don't see that INWOG, right? But let me expand it so you can see it. There you go. We have a fair value gap here, but more detailed INWOG, which is more precision, right? So I use the fair value gap as an area of interest. Could take scalps off that. But if we push down into the INWOG, I am definitely looking to get long, right? So 22,773 and make a push up about 3.44%. Again, could be higher just based on the catalyst that we have this week. That level sits at 23,531 and lines up with everything we're seeing on the monthly time frame. Now, that's it for the NASDAQ. Let's move over to things that support my thesis, starting with the volatility index. We look at the volatility index. The first thing you'll notice is we have this contract rollover gap, right? That sits right at the lows, right from here. This is when the contract rolled over, right? Yeah, let me just put a border around it so you guys can see it. So the contract rolled over here, right? It pushed up to the 19s, down up from 1840, and now we're pushing into this gap high, right? I call it the gap high because this is where the market broke above all of these highs and then kind of pulled back into this area. So I want to see the market fill this gap, but I want to see it go up higher in order to do so. So then I just look at the chart and I say, okay, where's the inefficiency? Meaning, where is the market creating some type of level of gap? Well, it's right here, right? Right above the previous weekly fib that has not been mitigated yet. So that's a double confluence, right? So what I'm looking for is I want to see the VIX get pressure. Maybe we get some fear in the market, right? They've already talked about, tariffs on August 1st, Trump or America attacked this country. I don't know. I don't pay attention that much, but I do watch YouTube. So I see the titles, right? That is going to create some level of fear. If the fear is in the market, the VIX is going to react. I can see gold reacting already. So if the market's going to go lower, it's going to create a VIX spike, which is exactly what I want to see. I want to see the VIX spike into the 20s, which will give us a really healthy pullback. And then when that pullback is over, the VIX is going to start targeting this gap down here, which would lead me to believe that the market would be shooting for all-time highs from that VIX spike, right? So that's what I'm going to be looking for out of the VIX. If this happens, I do this, right? If then statements is what I'm going off of, not, hey, this is exactly what the market is going to do. Like, no, it's just, this is how I'm looking at it. If it does this, this is what I'm going to do, right? So that's one of the supports for my thesis. The secondary support for my thesis is going to come from news catalysts. So let's move over to the news on the week. Before we go to Forex Factory, we're going to look at the earnings for the week. The only time you will ever hear me talk about earnings, I do it once every 3 months, right? And I do it for about 3 weeks. And it's only because it's the only time that earnings really matter to me, because it's the only time they're really going to create some level of catalyst, right? The earnings this week, I said it in my last video, bank earnings are next week. Well, here we are into next week, and the banks are going to start reporting. If you just do yourself a favor and look at some of these major banks and see what they've been doing up until this earnings, you will see that they are really, really buying the banks. Why? Because they think interest rates are coming, and banks never really lose. Like, just put it out there. They're always going to win. The only thing you got to look at for banks that the big money is looking at is their guidance, right? Their guidance is what's going to make the difference in whether or not the market goes up or down. But we have JP Morgan Chase, Citi, Wells Fargo, BlackRock. And remember, these are Tuesday before the open. Hobbs is going to be locked in on Tokyo and London, right? Because I want to be in these trades this week prior to these companies reporting. So I want to be in the London lows or the London highs. I want to be in the market in London. So Monday and Tuesday, I'm going to be locked in trading the London session, right? I'm preparing my mind mentally for what's coming, because I already know these are going to be huge catalysts, and I'm locking in on the S&P 500 and the Dow Jones. The NASDAQ does not care about financials. Just going to put it out there. They still will get a spike, but they do not care about financials, okay? Wednesday, Bank of America, Goldman Sachs, Progressive, Johnson & Johnson, Morgan Stanley, all of these are huge. When do they happen? Before the open. London trader is what Hobbs will be all this week, right? Will I still trade New York? Maybe. I may not need to, because I'm going to take my trades into New York, and I'm going to get out of New York. Okay. Thursday, Netflix, Bancorp. This will move the NASDAQ on Thursday. Netflix, it rarely misses, very rarely misses. Okay. And then we got Friday in and off with 3M and all that good stuff. But Friday is going to be cleaned up or given even more catalyst by the next thing I'm going to discuss, which is the news going into the week from the Fed Forex Factory. Now, if I can get my computer to stop lagging here, give me a second. I'll switch over the screen. There we go. All right. So going into Monday, there's not a lot of news. Hence the reason why I think that the market should be looking to create its dealing range on Monday, whether it's to go down, to go up, or go up to come down. It's probably going to start creating that range on Monday. On Tuesday, we have core CPI, right? And I want you to take a note of this because this is something that you rarely see on CPI numbers. Previous was 0.1%. We're projecting to be higher, forecasting to be higher already, right? So already inflation is, they're saying that inflation is going higher, right? So that's not good to begin with, that the forecast is already projected to be higher. So that's going to be a reason to sell the market, right? Now, if we beat this number and we come in at the previous, what do you think the market's going to do then? Right? Guaranteed they already know, it's already priced in what they plan on doing. But hey, just something I throw out there. Going into Wednesday, core PPI, again, previous is lower than the forecast. I find that odd, unless it would be a surprise if we beat, which would be a reason to buy the market, in addition to bank catalysts. But hey, who am I? I'm just a guy. Who knows? We'll see how it delivers. Going into Thursday, right? You already know Thursday is always going to be unemployment claims, but then you add in core retail sales, which is always a market mover. I'm telling you, if you've made it to this point inside of your account, this is the week you want to put some freaking size on and you can make plenty of money, but do it within your risk parameters, okay? Friday, prelim consumer sentiment. This is the body bag right here, right? However, one thing I have been noticing as of late is if we have a ton of catalysts the first 4 days, right, then Friday, the thing that most people are looking and waiting on to move the market, sometimes ends up being a nothing burger. So if you made plenty of money Monday through Thursday, just leave Friday alone, man. Just walk away, enjoy the weekend, and then just keep banging going into next week. But those are all of the catalysts going into the next week. I think I covered everything in regards to the market. Guys, if you're enjoying the top-down analysis, please make sure you tip the barber, aka hit the like and subscribe button. My name is T. Hobbs. This is the top-down analysis, and I'll catch you guys on the next one, man. Peace.